I'd like to take a moment to thank the Blockchain Academy. The Blockchain Academy is an educational training firm offering blockchain training to the enterprise. The Blockchain Academy offers courses for both management and developers, offering delivery online and in live classrooms. The Blockchain Academy works with enterprise clients to create and deliver innovative training programs globally. They recently announced a new blockchain course targeted towards attorneys. To learn more about the Blockchain Academy, visit them at www.theblockchainacademy.com.
This is the Blockchain 360 podcast. Blockchain 360 is a podcast of interviews and discussions about the current state and direction of blockchain. Thank you for joining us today. If this is your first time listening, then thank you for coming. The Blockchain 360 podcast is produced weekly for your enjoyment, and show notes are found at our website, blockchain360.co. Come back often and feel free to add the podcast to your favorite RSS feed or iTunes. You can also follow us on Twitter at Blockchain360. All links discussed today are included in the show notes.
My name is Bryant Nielsen, and I'm your host here on Blockchain 360, where we talk about everything blockchain. But my guest today is John Wu, and he is the Chief Executive Officer for the Digital Assets Group of SharePost. This is a business unit that's dedicated to extending SharePost's current leadership in private corporate assets into the digital currency, token, and blockchain world. His team is building a security token ecosystem around its robust technology and compliance platform. Issuers and investors will use SharePoint's existing alternative trading system to invest in STOs and trade in the aftermarket of digital securities in full compliance with U.S. laws and regulations. Previously, John Wu was the managing director and founder of SureView Capital, a technology-oriented investment firm seeded by the Blackstone Group. And prior to SureView, John was at the Kingdom Capital, a multi-billion-dollar long-short hedge fund where he was the technology portfolio manager. John began his investment career at Tiger Management, and he received an MBA from Harvard Business School and has a BS in economics from Cornell University. It's really nice to have you on this, simply because I've been reading a lot about your background and what your role is at SharePost, especially as your role for the Digital Asset Group. So how is it that you actually got into the crypto space? And tell me a little bit about what you're doing.
Sure. So there's two parts to that question. One, how I got into the space, and secondly, how I became an entrepreneur in the space. So as you highlighted in my background, I've been a technology investor for most of my career, and I've always run towards emerging technologies from an investor perspective, looking at them as if they are, to study them and research them to see if they are viable investments. And when I first got onto Bitcoin and blockchain in 2013 and 14, I was running my technology fund. And I obviously thought it was very disruptive and it was potentially a revolutionary technology. And I wanted to invest in it so badly. But when I studied it, I realized a couple of things. There just wasn't any systems, tools, or infrastructure in place for a financial institution or a regulated institution to be able to invest in it. There were no accounting systems internally, no OMS, order management systems, or even proper market data to collect. Externally, there was no custody, no admin, and frankly, the regulatory clarity was not there either. And there was, frankly, not that much liquidity. So, kind of frustrated with all that as an investor, I ultimately just invested personally, and I was not able to capture any of that for my customers. But that's probably a good thing, because if you think back, and I made the right decision, because you can tell your customers that you lost some money in an investment, but you can't tell your customers that you lost their money. And that's when I realized that the infrastructure and the rails in this space needed to be developed. And that's part of the reason why I'm at SharePost, to help create those rails for future institutional investors.
Now, one of the things that we actually covered in your bio here is that you're building this alternative trading system simply because you don't think that there's, the security token ecosystem is just not as robust as it needs to be. So, what is this alternative trading system and how is it actually working?
Sure. You're right. It's not as robust as it needs to be for real institutions to invest. And to take a step back, I
So, it's
guess,
not enterprise grade, is what you're saying. The enterprise tools are really not there.
correct, correct. So if I take a step back and talk about SharesPost and what SharesPost does, SharesPost has been around for 9 years. It's the largest marketplace for private securities. Today, those are Lyft, Uber, Airbnb. Back in the day, that was Facebook, Twitter, and LinkedIn. So these are private securities, so therefore they are securities. They are uncertificated, unregistered securities, but nonetheless, as a security, one needs proper broker-dealer licenses and the ATS, alternative trading system, in order to transact these things. With that said, the digital asset group is using those resources, the licenses, the compliance know-how, and the processes, and creating a marketplace for security tokens. The alternative trading system is not just the license that's received from the SEC, but it's also been fitted for digital securities. And digital securities are very similar to private securities. In other words, they are unregistered, uncertificated securities. And this is what the SEC has deemed necessary in order to create an electronic marketplace for security tokens.
Now, part of this, I'm sure that has drawn you into this, of course, into the entire crypto ecosystem is that we had such a run up in 2017 in terms of valuations, and now we've seen the reverse happen, a crash to Earth, as is often said, in 2018. Now, why? What is driving that run up and then that collapse?
So the run up in 2017, I think, on a broad basis, was based on two major promises. One promise was on the technology side, where we were going to have scaling imminently, 6 months from the end of 2017. And with scaling in the crypto asset world, that leads to more applications and use cases. On the other reason why I think there was a big run up in 2017 was this promise that there was this massive capital inflow from institutions all ready to jump into the cryptocurrency asset class. And going back to my personal experience, again, I realized, well, that's probably not going to happen because the infrastructure and the tools was just not there. Again, there was a lack of what I call the security token stack, everything from the underlying custodial uh, relationships necessary, the settlement and transfer agents that exist in the traditional trade flow, and ultimately the primary and issuances of security tokens, and as well as the secondary landing place for security tokens. So I veered off a little bit to security tokens, but the first two was also, generally speaking, where crypto assets was not, satisfactory in terms of tools for institutions to enter.
Right. Now, in doing your research, when you first started to come up with these ideas, especially for the digital asset group, you started to do some back of the envelope type calculations that created a valuation, or at least come up with a valuation. Can you explain to the listeners exactly what that process was that started you on
I
this
think
path?
so. I think what you're referring to is what attracted me to invest in this space personally back in, the 13, 14, and 15. Um,
Right.
and it was people, investors like to look at things from a DCF perspective and a security. What I realized was that there was a huge demand and supply imbalance at the time. There was really just Bitcoin. And there was about 15 million units that were mined at the time. And I had my team just do a simple back of the envelope. If there's going to be, 26 million units by a certain date, and if I just calculate on a linear basis, on a daily basis, how many units will be mined per day times the price back then, which was, around 500, literally that meant $1 million worth of Bitcoin was released into the system a day. And
Right.
tracking the addresses and tracking the wallets that were being created at places like Coinbase, I realized that there was way more than $1 million demand per day. And therefore, that supply and demand imbalance to me made it a very attractive investment. And that's why ultimately, although I couldn't do it for my fund, I was a user in the sense of investing personally.
Now, you're looking at this in terms of creating this alternative asset trading system was because you didn't want to miss out on something. So, what was you already said that you were introduced back to in the crypto space back in 2013, 2014, 2015. But did you have a prior experience where you thought that you didn't want to miss out that kind of drove you more towards this space?
I had a
I mean, there's always the fear of missing out. The FOMO is out there for everything. So was that a part of what you experienced too?
yes, somewhat painful to recant old stories, but having been a technology investor in many different time periods, I guess, one that stands out was way back in the early days of the internet when AOL was a public stock at the time. And a couple of things happened. There was a huge outage, and a lot of the hedge fund brethren that I was part of back then looked at it as, wow, see, therefore it's justified that product doesn't work, and therefore we should either not be invested in it or we should be shorting that security. I think we all got that wrong in the sense that we misunderstood that the demand that was driving far outstripped the existing infrastructure at the time. And what I think 2017 showed me was a parallel to that day where this massive price explosion showed you the potential power of getting global access to investors to be involved and showing how network effects can affect a certain technology. And for me personally, I did not want to miss out on that again, either as an investor or as an entrepreneur.
That leads me to my next question. One of the things that you're working on, of course, is this new development settlement system for crypto trading platforms, and you're calling this Glass. Can you tell us a little bit about Glass and what it stands for?
Yes, we're very excited about GLASS. GLASS stands for Global Liquidity and Settlement System. So GLASS is a decentralized B2B clearing and settlement network for security token trades among global exchanges. We're hoping that in this network, licensed entities such as SharePost in the US, and we'll invite other licensed entities in other geographies or jurisdictions into this network, that these licensed entities can provide compliance as a service to exchanges or trade referrers who lack the licenses in the appropriate jurisdictions. So, in other words, we want to enable the global trading of security tokens or compliant trading of tokens. And the only way to do that is to be inclusive and invite everyone possible, both exchanges that are currently out there who do not have licenses, and invite the settlement providers who do have the licenses and sharing a network.
So, how far are you on the development of this? And I think you can listeners can learn more about it at glassnet.io. Is that
That's
correct?
correct. So we are signing up various participants on the settlement provider side into the network, as well as on the exchanges. I think we have um, already 10 different partners working with us in this network. And they're very excited about this because if you walk through a trade, for instance, and that'll highlight why this is very powerful. Say there's an exchange in China or Singapore who wants to list a security token or any token, but they lack a US broker dealer license. So, as a member of
Right.
Glass, they can list the token. An American buyer using their site in China can purchase that token on their exchange. And then what happens is the details of the trade are disaggregated from the assets themselves. Then the trade details are sent via an encrypted message from that Chinese exchange to the Glass network. And in this case, because the buyer is a US buyer, that detail of the trade will be routed to the US licensed entity SharePost, and then the appropriate details will be vetted, whether it's the KYC, AML, or accreditation of that buyer, and then the issuer or the token itself, and whether it's a proper token or not. And once that's vetted, The Glass network will certificate that as a compliant trade, effectively approve or reject the trade. And then they will send the encrypted message back to the platform or the exchange. And the exchange will then handle the actual asset exchange between their buyer and seller. So we give them the ability to be compliant without them losing their customers. And then we handle all the reporting and the back end processes post trade.
I would like to take a moment to thank one of our sponsors, the Blockchain Academy. The Blockchain Academy is an educational training firm offering blockchain training for developers and stakeholders. The Blockchain Academy is currently offering the following live courses: Blockchain Security, Hyperledger Developer Workshop, and Ethereum 0 to DApp. Visit the Blockchain Academy's website for course outlines and course dates. The Blockchain Academy's courses can be delivered as a company-specific training, tailor-made to fit your organizational needs, delivered both on-site and online. The Blockchain Academy's training is cost-effective, flexible, and can be conducted in a manner that best suits your organizational needs. To learn more about the Blockchain Academy, visit them at www.theblockchainacademy.com. Now, part of this settlement network, of course, is ensuring all the compliance issues, the compliance before the trade, compliance check as the trade, and after trade compliance. Um, how are you managing that? Is that all part of SharePost?
So in the Glass network, it will be led by SharePost, but each jurisdiction, each settlement provider within their geography is responsible for understanding the specific rules in that local region. That's the problem with true compliant global trading, is it's that every geography has different sets of rules, and it's almost impossible for one player to aggregate all the licenses or to understand the differences in rules in all the different geographies. So if you create a network where people can share resources, it's a far more viable solution.
So that then leads to the question of this is why would these participants want to share or be a part of the network? I mean, there's got to be some issues that you feel are preventing security of token adoption.
Sure. So there's two players in this. There is the settlement providers, and then there are the exchanges. Now, the exchanges are a lot of these exchanges right now are global, and they trade with customers from all over the world. It's questionable whether they are compliant. And to go forward, as we get into a more compliant world, they will have to either start getting licenses on their own, or they can join this network. Now, on the settlement providers, it's a great way for existing broker dealers or people who have, like us, ATS licenses and have a match engine or an exchange or a marketplace in the US to also get a second stream of revenue by effectively providing compliance as a service to other people who want to get access to that local jurisdiction. So I think people will appreciate the participants will appreciate a second stream of revenue in the Glass network for the settlement providers, and for the exchanges, or we call them the trade referrers globally, they'll have the ability to trade more compliantly.
So, how many exchanges are already participating in the Glass network, or at least
We
initially?
have about 10 that's already signed LOIs, and we are working to better integrate our technology as well as go through the regulatory compliance necessary for the different geographies.
And so, what is the roadmap for Glass currently then? What have you accomplished to date on that, and what is coming
Sure.
up?
So the first step for SharesPost proper is to get the SharesPost security token marketplace in the US going. In parallel to that, we are also working on Glass and enabling others to trade other foreign exchanges to trade in a compliant fashion in the U.S. The roadmap for both these products are hopefully, I like to use the word liftoff, but launching our beta at the end of this year and a scalable full product next year.
That's great. One of the things that a lot of people are not aware is what is the size? What is the size of these private? What's the private market size for security
So the
tokens?
way I look at that is there's many numbers out there, just to be clear. But if you look at 2017, there was between enterprises that raised direct as well as IPOs by enterprises, roughly 350 billion in proceeds to these companies were raised through either an IPO or through a private placement. So I think in 5 years' time, we can be as high as possibly 10% of that market. And even if we're just 2% of that market, we will be helping companies raise more money than the token market was in 2017.
So one of the things that you brought up is that glass is a part of the trying to bring institutions into it. So what has been the I mean, is the hesitancy of these institutional participation been primarily due to the this regulatory environment and not having these issues settled correctly?
It's a
I mean,
combination.
how does that all
It's a
work?
combination of um, interpreting existing regulations, as well as literally, frankly, people just or companies need to create the infrastructure. And if you look at the traditional trade flow on a public market, it starts with the initial trade, which it could be generated either from a buyer or a seller, and they originate typically at a Fidelity, a Schwab, or a TD Ameritrade. That would be step one. Step two, is this one of these brokers sends a transaction to an exchange for processing and matching of that trade, and then when that is done, the exchange sends the trade to a central counterparty, such as a clearinghouse, where things are reconciled with the brokers to make sure there's no default or counterparty risk. Now, a lot of small brokers have to use a third party clearinghouse, and the large players use their own in house clearing. So, like JP Morgan has JP Morgan Clearing Corp, or Schwab has Charles Schwab Clearing. After the clearing step, then you've got to send to the settlement step. And that's usually where the DTC, the Depository Trust Company, comes into play. And finally, the transfer agent of the underlying issuer has to update the shareholders list. So it's kind of like a 5-step process. Part of the problem is crypto natives in the dream world will reduce all of this to maybe just 2 steps. So a decentralized exchange where a buyer and seller can meet each other, they really don't need an exchange in the middle. So you just shrunk those two things into one step. And then the blockchain itself is where you clear and settle and transfer, and that's the record. So that's the ideal world where we all want to get towards. But to get there, it requires compliance, and it will require some intermediation, I guess, re-intermediation, I should call it. There won't be a shrinking a 5-step process down to a 2-step process. You need players like us and other players to perhaps help shrink the process from 5 to maybe 3 or 4 steps. So that, I think, big problem is trying to reconcile what the vision would be in the ultimate world versus what's real and what can be done in the short term.
Okay, that really then gets us to I'm in an agreement in terms of saying that blockchain is a disruptive technology. But one of the things that you seem to be referencing is that there's going to be all these assets are going to be created digitally. So there'll be a tokenization of these non-digital assets. And so what you're actually saying is that uh, this tokenization is going to lead to new classes of instruments. Am I
Yeah,
understanding that
absolutely.
correctly?
I think tokenization, if you look at it from some perspective, is a new way to create financial structures. And there will be financial structures that are created based on that this technology enables that we haven't even thought of. A lot of the issuers that I see, especially in overseas in Asia, have hybrid solutions where STOs are provide dividends or are part of a rev share agreement or have some sort of substitution for debt. An example would be in Asia, in Southeast Asia particularly, there are there are large banks that enable financing for large capex projects for large conglomerates, and then there are effectively pawn shops where they charge usurious rates for smaller, medium enterprises for little things like buying a moped fleet for their employees to get around. But there's really nothing in between. And if you want to go on the low end, you end up paying ridiculous interest rates. So creative companies overseas have figured out a way to effectively raise a security token where investors will basically give money to the company in exchange for a dividend. And then at the 3 or 5 year term of this token, they get the residual value of that moped fleet. Now, this is great because at the same time, the companies, the issuers who are doing this now have a lower cost of capital to run their business, and at the same time, they go cross border and they sell this product to Japanese investors where the interest rates are so low that there is a huge attraction for this dividend yield. So that's a good example of something that probably we don't think about that much here in the U.S., but it is being created overseas, where financial infrastructure and lending institutions are probably not as established as they are in the US, and there's plenty of applications being developed.
So what I'm hearing you say is that security tokens or the development of security tokens is going to provide access to capital for these mid to small institutions that they're not getting from the traditional capital markets.
Overseas, yes, and also, in the U.S., there are also applications. Our friends at Harbor are creating a platform where real estate funds and real estate companies can tokenize the ability to buy real estate. Fractionalizing that ownership allows more people to participate, and that is a great example where a security token and the application of it can unlock value by bringing liquidity to these traditionally illiquid asset classes.
So aside from real estate, do you see that there are other types of assets that are going to benefit from tokenization? I mean, that clearly is one. But what other areas do you think there's going
Yep.
to benefit from this
So on that
tokenization?
same theme, it is basically bring liquidity to traditionally illiquid assets. I see this in fine art projects, for instance. Bring a wider investor base to those assets because buying a painting is so expensive. It's a limited subset. But if you can collectively buy something, there'll be more interest. Private equity funds are also being tokenized. So there's a lot of applications out there in the US where, again, we're bringing liquidity to traditionally illiquid assets.
Now, it's clear to me why you would want to tokenize, say, real estate, commercial, or even large ownership of apartment buildings, as an example, as well as tokenizing, say, private equity. Explain to me how it would help in the art market. I mean, it's not like I can buy a share of a particular painting. Yes, it creates the opportunity for liquidity, but where would, I mean, do I get it to hang the painting in my house, for one day a year? I mean, like, so how does that work in something where it's not an income producing asset? It is an asset. It does appreciate, but it doesn't generate, an income stream.
Sure. It allows you to be part owner in something. It's similar to having uh, a co-op in your building, being a part of a co-op in your building, or perhaps when you own your
Yeah,
Apple
I mean, I
stock,
understand
you
that
don't
part.
hang your Apple stock
Um,
certificate either, but you're a part
it's
owner
that
to
was,
that,
I mean,
and you get to
I've
participate
actually
in
been
any
on panels
appreciation
recently where
of
we
the
talked
underlying
about the
asset. So I would think of
tokenization
it in
of
those terms.
things like art or music, and its production and manufacturing, and owning the master rights. And I agree with you. It's a great aspect of it. So really, then stepping back though, what are the major gaps that the security token market is encountering, and what's the solution that you're trying to create, either with Glass or what SharesPost is
In
trying
my
to do?
opinion, there are three big gaps right now: a compliant custody solution for financial institutions, proper settling and clearing, and liquidity for security tokens. SharesPost is trying to become the liquidity solutions provider, both in the US with our marketplace and through the Glass network for global exchanges. the liquidity solutions where we are focused. Our friends at Harbor, Securrency, Securitize are working on the settlement and clearing and transfer. And there are companies like BitGo working on the custody side.
All right. So one of the things that I've also noted is that there's still some major gaps. What are the major gaps for this security token market? Are we really seeing that it's an institutional aspect, or are we saying that from the individual basis, the user experience is needs refinement? I mean, what is that in terms of
So,
adoption?
as a user myself, I can definitely say the user experience for institutions has to be similar to what they're used to right now. They need to have solutions that are
So it has to align to what their engagement is.
absolutely. If you cannot have a custodian solution that has almost zero insurance associated with it because they're used to having insurance and it's part of a big checklist when institutions decide to invest in anything. You can't have um, uncertain security in terms of custodying that product. You can't, tell someone that the blockchain is good enough for settling and clearing and transferring and being that cap table management if the SEC hasn't blessed that. And and again, from our side, the liquidity aspect. If they get through those hurdles, they want to be able to know that they can transact in a relatively liquid manner. Again, those three gaps are still what most of us are trying to solve and moving a lot further than we were just a year ago.
Well, so you brought up the idea of liquidity a couple of times, and there's been a lot of effort by various groups, individuals, even exchanges, to come up with solutions that will provide a greater amount of liquidity. One of those items is, of course, using Bitcoin as the digital asset example is Bitcoin ETFs. What are your thoughts about any of these proposed Bitcoin
So
ETFs?
that's a great question because we've seen, if you asked me this 2 years ago, I would have easily said, I think we will have a Bitcoin ETF by 2017. But I think the SEC is highlighting some of the gaps that you've highlighted here, where unless you have one of the reasons why they have not approved an ETF, I think, is again the custodial um, situation. They are not comfortable with what exists out there. There are other reasons too, but I think that's a big reason why. Having spoken to a lot of the people who are solving the custodial issues, I think we're moving towards that. And I'm going to not make any bold predictions, but I will say that at some point we will have an ETF and we'll have ETF like products, backed, which is the Intercontinental Exchange, the ICE owned digital asset exchange, recently confirmed that they're releasing physical delivery of Bitcoin futures contracts, 1 day futures contracts. That's almost like disrupting the spot market.
Right.
Um, as we move every day forward and people are solving these, we will have an ETF product. And I think that will be great for the whole ecosystem of cryptocurrencies because it'll provide confidence that's needed right now in the volatile crypto markets. And that clarity will enable a lot of us to move faster in terms of our solutions.
So now we've talked about the potential of a Bitcoin ETF. Do you think that there will be other um, crypto ETFs also, say an Ethereum one, or maybe EOS, or any of them? Do you think that, or I mean, we've also seen with Coinbase that they've come out with this very low cost crypto index, and for $25, anybody can actually then buy into this index. I mean, do you think that the issuance of these new types or this organization of new types of this securities is really going to increase liquidity for the market acceptance, provide some stabilization to the volatility that we encounter on this?
Absolutely. I think the answer to your first question is yes. We ultimately will see ETFs for other crypto assets, whether it be currencies like Bitcoin or Ethereum or even maybe EOS or Stellar, et cetera. But in the meantime, we're going to have continued creative solutions that are compliant, such as the ones that you highlighted, that get the asset into more hands, whether it's retail hands right now or ultimately someday institutions. You know, even Yale University, MIT, Harvard, and Stanford endowments have all recently announced that they were, either interested or investing in cryptocurrency funds. So every solution that we have out there that's compliant will propagate the interest level in this space.
Now, you said that you thought 2 years ago that we would have had an ETF by 2017. We're in 2018 and fast approaching 2019. When do you think that we're going to have that first Bitcoin ETF? And what is then the domino effect for these other crypto ETFs coming
Brian,
out?
you're going to force me to give you an
What's your
answer, aren't you?
projection? Well, at least for this, because I'm going to ask you another question that's also about predicting the future. But let's start with this. So,
I th-
when do you think that final ETF approval will arrive? I mean, there's been so many proposals out there, and it has seemed, at least from my perspective, that we're right on the cusp of getting that, and then it's like washed away. It's blown away. It's like it was vapor. It was just a mirage for us.
So tracking, I would say, noise in this space and participants figuring out compliant solutions that is just short of an ETF, and talking to the ETF creators, my best guess is I would say back half of 2019. And I say that because yesterday we just had the news that Fidelity is creating the digital assets, and they are solving, will offer cryptocurrency custody and brokerage solutions for institutions. And as I said before, I think if you get credibility in that custodial solution, then that will be the first big step towards the regulators accepting a potential for a Bitcoin ETF. So you're forcing me for an answer, Ryan. You're a great interviewer, and I assume 2019 back half will be the answer.
All right, so that's for the Bitcoin ETF. When is going to be the Ethereum ETF? Is that going to be pushed all the way to 2020?
I think that
Or will it be just a quick domino? It's like finally one is, so let's
no,
just go
I'm not
ahead
sure
with
it
it.
will be as quick a domino as people would hope. Again, the security of such an asset and then how it's regulated will be important. In other words, it's there are different requirements to secure different types of currencies. So it'll depend on that. And also, a lot of these are not securities, currencies, and they are securities. And how is that going to be bundled
Right.
into an ETF? So I think it will not be a quick domino. I actually do think it will be one at a time. And then after one or two of each asset class, you'll have a domino effect.
Okay. So then I'm now going to end this with the following. I want to know what your projections are for the security token market for 5 years from now, and then coming back. So where do you think we'll be in 5 years? So that will really be in 2023. But what are the steps that we're going to have to experience to get to that longer term projection? Because it's kind of easy to say, where are we going to be in a year? And I mean, when I first started doing a lot of awareness and training, because I own a training company on blockchain, I actually thought there would be fairly widespread adoption, enterprise adoption of the technology and the issuance of security tokens clear back in 2017 or 2016. 2016, there was all these POCs that were out there. People were actually looking at creating these fractionalizations, especially in the real estate market. Um, but we didn't have it. So, the 1 year projections have proven to be at least wrong for the last 2 or 3 years. So, what is your 5 year projection? And then what is your 1 year projection?
So in 5 years, I think the target market for security tokens, again, are those companies that are either raising in private placements directly or I,
Wait, I actually
okay.
want to stop for a sec. Do you think that the security tokens are going to be company based or are they going to be asset based? Like, if I took a commercial building, that was, say, in Manhattan for $1 billion, am I going to just securitize the asset itself, or am I going to have the managing company? I mean, it could be both from from a structure standpoint. But do you think that it's going to be company based, or is it going to be asset based, or is it going to be a mix
It
of
will
these
ultimately
things?
be a mix, but initially there will be legal wrappers, so it'll be more company based. You can't. I don't think we can go straight to just owning that building outright. That has different complications. But if you put a legal wrapper around it, you'll be able to tokenize that easier.
Okay. So again, going back to 2023, where do you think we're going to be on this? Is there going to be widespread adoption? Are we already going to have the digitalized tokenization of these existing securities? I mean, you brought up the DTC. They're the settlement agent in the United States for these asset trading classes. Are we going to have like IBM tokens and Apple tokens and Amazon tokens and Procter and Gamble tokens,
So I don't think it necessarily.
or are they just going to be a digital
I'm not sure it
representative?
makes that much sense to do a tokenization of an existing public security that you mentioned because it doesn't
Right.
provide that many advantages. I do believe there will be a creation of new assets that are possible to create and manage right now through traditional methods. But with all that said, to answer your question, again, I look at the addressable market. In my opinion, a security token is an issuer who's doing a security token is someone ideally suited who doesn't want the illiquid private placement aspects of doing a private placement. And at the same time, they don't necessarily want to be a public company and associate themselves with the costs and the transparency, giving away company secrets to an emerging industry. So they fit somewhere in between the private placement and the IPO. So that 350 billion proceeds that were raised by companies in either directly raised by companies either in a private placement or in an IPO issuance in 2017, that's your target market. And I would not be surprised that in 5 years we get between 5 and 10% of that market in some manner of a security token issuance.
Mm, wow,
Yes.
that's a lot. That's a huge amount. So then coming back to the second half of that question, where do you think we're going to be
I
in a
think in a
year?
year, in 2018, we've seen a lot of Reg D issuances from from companies who want to do things compliantly. So in 2019, roughly a year from now, you're going to see a lot of these primary offerings trade in a secondary manner and hopefully on the SharesPost platform.
Okay. I want to thank you. This has been a very interesting conversation with you, and it's different in terms of some of the things that we've generally talked about. And one of the things that I appreciate is this idea of the development of these traditional markets and how they're going to adapt to this new world, this disruptive world that blockchain is actually introducing. Is there any final words that you have to share with us? Otherwise, it's
Well,
been
Brian, first of all,
great.
I want to say thank you very much for your time. The only thing I want to share is I want people to realize that it was kind of unreasonable in 2017 to expect that we'll be buying Starbucks with our Bitcoin. And if I look at all the other technologies, there's always these ups and downs. But ultimately, blockchain and crypto assets are truly a better way of doing things, and it will take time. But when it does come to fruition, it's going to be far better than the existing solutions out there.
I would agree with you. Anyway, thank you very much, John. It was a pleasure to have you here on Blockchain 360. And if anyone wants to know more about what John is a part of, um, in the show notes, there's going to be links to glassnet.io, as well as to SharesPost, as well as John's Twitter account. Thank you again, John.
The Blockchain 360 podcast is produced weekly. Have a question? Want us to interview someone specific? Wish to hear about a particular topic? Let us know. You can email podcast@blockchain360.co or tweet us on Twitter @blockchain360 or at our website blockchain360.co.